Hey, Nick.
Hey, Warwick, how you going?
Oh, I'm a little nervous.
Don't be too nervous. It's okay.
We're about to fall into some stereotypes, I think.
No, actually, I've gone very safe today. Are you ready?
Okay, I'm ready. I don't know if our guest is ready, but I'm ready.
What kind of house weighs the least?
No.
A lighthouse.
G'day, I'm Waz.
And I'm Nick, sometimes Coxie, mostly Nick.
This is the Tradies in Business podcast, and we're here to share a bunch of tips, ideas, tactics that you can put in place to get change happening in your trade business right now.
If you're really lucky, we're going to entertain you with a few mum jokes and, more importantly, a bunch of fantastic guests that will educate you in all things you need to know about trade business. But we do promise to do it with a whole bunch of fun along the way.
I'm a self-confessed idiot, so strap yourself in and enjoy another episode.
Oh, that is
Very good.
not even, you didn't even have a slight stab, Nick.
No, they were too mean. I wasn't going.
We wanted the guest to actually stick around and record the episode with us. Oh, dear. Matthew Rosie, welcome to the podcast, mate.
Thanks for having me.
Pleasure.
Pleasure.
My joke.
It's all up from here. So now, can I call you Matt, or do you prefer Matthew?
Yeah, Matt's fine.
Matt, okay. I don't know an Australian Matthew that's not called Matt. It would be pretty rare, I think.
Yeah.
Matt, you're not just a real estate agent. We've had a bit of a pre-chat before we hit record, and you are in an area that I think a lot of people think they know more than they really do about real estate, particularly tradies. I reckon tradies fancy themselves as property investment, I wouldn't say gurus, but at least competent, and reckon they could do it. And unfortunately, in my past life, or one of my past lives as a financial advisor, I saw lots of people, especially tradies, especially builders, get themselves into all sorts of strife with their choices. So but before we dive into the tin tax today, Matt, can you tell listeners a bit more about you and how you got to be, a world famous property investor and buyer's agent, mate?
Yeah, thanks. I probably wouldn't say I'm world famous, but thanks for the introduction. So my name's Matthew, obviously, of Rosie and Rosie, being my last name. The other Rosie is my sister, Kate. We provide property management and investor advocacy services here in Adelaide. I started investing in real estate when I was in my early 20s. The first one wasn't necessarily meant to be an investment, but it did certainly put me on a journey. What a little 2-bedroom creek and brick walk-up unit, which was very colourfully painted by the previous owner. And I just neutralised it, basically, giving it a bit of a paint job. And I think we replaced the carpet and vinyl flooring, which was just in a roll back then. It wasn't these fancy plates that you have now. Improved the value of it. And through that, I think that whet my appetite for real estate. So I ended up doing, Kate and I both did our certificate in real estate at the Real Estate Institute, and had intended to go into a traditional real estate professional environment, working for a local agency, which had work lined up. Kate was actually already working in property management, so she was really just getting the ticket that she needed. Whereas I was looking to get into the industry, seeing what I thought was a lucrative opportunity, and was doing that certificate that I met a chap who was doing investment advisory services, which, as it turned out, was actually project marketing. So your listeners might have come across spruikers in their time.
Mm-hmm.
So I found myself working in one of those firms and thought we were doing the right thing. It was certainly aligned in many ways to what I was trying to achieve through real estate and using it as a vehicle to create wealth. But it worked out that it's much more about selling a project off market than it is about helping people create wealth. So, so Kate and I decided to start Rosie and Rosie and offer, I guess, a service that was more focused on the investor and what was appropriate for them, rather than the one size fits all option, which comes with the Spruikers. And yeah, it was, I think, a complementary joining of our two backgrounds. And yeah, that's what we've been doing since. So helping people who want to invest in property do so with confidence, and then helping them to manage that property and grow their wealth through building a portfolio.
If you're based in Adelaide, does that mean that the kind of work that you do is strictly within Adelaide, or do you look outside of Adelaide depending on the opportunity?
We would sooner introduce someone to one of our peers in another city or state than pretend to know everything that's going on everywhere. I know there's borderless buyers agents, and that's, it's up to them, but we prefer to be really niche and really focused on our local market. So for us, it's all about just looking after people who want to invest in Adelaide and introducing them, if they do want to diversify interstate, to people who we trust interstate doing the same.
Love that. What do we need to know about investing in property? I felt like I could just go and buy a house. It was cheap. I could do exactly what you did, Matthew, in the first place, a little bit of a cosmetic reno, flip it off, do it again, time and time. I'd build my money up, but I don't think it's quite that easy anymore.
Yeah, look, you could probably buy anything, and if you held it for long enough, you'd make some money. But in the meantime, perhaps you could have used your money more wisely, had it working harder for you. We find a lot of people get stuck by focusing on location first, whereas that generally leads people into this rabbit hole of looking for the next hotspot. And then if they don't give up, they might get to the point of actually looking online at Domain and realestate.com and looking at properties, in or around the hotspot that they've identified, or hotspots, and then they end up getting overwhelmed by the choice of properties and starting to question themselves with things like, do I buy a 3-bed or a 4-bed, or do I buy a unit, or do I buy something that I can subdivide or add value to, or am I just too late? And again, the questions become overwhelming, and that information overload becomes frightening, and people just don't act. And so we like to hold people's hands through that process, and through spending more time up front in the early stages, take options off the table. There's a good saying that I use with our clients that I attribute to Abraham Lincoln, that goes along the lines of, if I was given 6 hours to chop down a tree, I'd spend the first 4 sharpening the axe. And so yeah, we take a approach which starts with the individual, or individuals if it's husband and wife or partners, whatever. Which I think is a prudent way of investing, and helps to take away some of the distractions that might come with trying to focus on the location first. So yeah.
Makes
Nick and I are both very, very good.
I'll let you jump in, because otherwise I'll just keep talking.
Yeah. Quick, cut him off. Go, Nick.
No.
There you go. Okay. So, Matthew, if it's not location, what is it? How do I choose a property if I'm not going to buy in a hotspot? Isn't that how I make my money?
Yeah. So there's a spectrum of strategies that people can, I guess, be aligned with, or should focus their efforts on. And at one end of that spectrum, you've got your very passive buy and hold strategy. Just buy something and wait. And then as you move through, you might have something that you can add some value to. So manufacture some equity or some value through a superficial renovation. And then it might be a little bit more advanced, where you've got more of a structural renovation or an extension. And then as you go further along, you might have a subdivision. And then I guess at the other end of that spectrum is your full-blown development, buying a site and maybe putting a medium or high density development together. which, there's definitely opportunities across that whole spectrum, but with the higher rewards, which comes at the more aggressive end of that spectrum, you've got much higher risks. And I think, where a lot of people underestimate things is the risk that's involved, but also their abilities. A lot of people overestimate their abilities. And I know your audience being tradies might find that somewhere in the middle of that spectrum is maybe the most appropriate space for them. If they can add value through their own abilities, then that could be a very effective strategy for them. But yeah, one of the things that we like to do in the first stages of planning and getting ready to go to the market is finding out what their goals are, and if they're realistic, and if they're shared by their partner, if the partner's involved in this journey. Their appetites for risk. We want to make sure that everyone's on the same page. It's a lot harder for someone to come up out of their comfort zone than it is for someone to sort of step back, just so that they're matched together.
Mm-hmm.
And finding out that those goals, are they realistic? Do they have, I guess, the physical abilities to do whatever it is they want to achieve? Do they have the financial ability or capacity to do it? Because a renovation might mean borrowing money and not having any income through the period that you're renovating it for. And the availability of themselves, their time, can they put the time into doing a renovation? Or even if it's a simple buy and hold strategy, do they have the time to be doing the research and doing the due diligence and inspecting properties and so on that's required for even the most passive type of investment? So as you go through that spectrum, all of those requirements increase. So financial capacity is much larger. The time that they need to put into it is much higher. Physically, you may not need to be, if you're doing a full development, you may not be out there, building these houses, but yeah, in any sort of renovation space, which I think a lot of people are attracted to, being either of a trade background or just through seeing how easy it appears on the reality TV shows.
You can do it in a weekend.
Yeah. And look, it is perhaps one of the most tax effective investment strategies, where you buy a house that you can add some value to, you move into it, it's your actual primary residence. And, you add the value and you get it, revalued, or you sell it for a profit, and you avoid, I guess, the capital gain tax that would come, if that was actual investment property. That is a very effective strategy for some people, but you need to be careful that you don't bite off more than you can chew. And that also, if you repeat that process, the ATO might question whether or not these is a genuine, upgrade of your properties, or whether you are actually in the space of developing. And so you may get caught out. But if you hold the properties for long enough, live in them for that period of time, then that can be a very powerful strategy. But yeah, it's not for everyone. I usually ask, when we're asking people to think about their goals, where are they in their stage of life? Because if you're a young tradie with lots of energy and lots of time, that might be a really good strategy. But what if your partner and you decide, maybe we want to have a family in the next few years? Because renovating around kids is it's a disaster. It's really, you've got to park the whole idea, really, in my opinion. To safely and effectively renovate, you kind of need to be pre-kids or well and truly post-kids.
Yep.
So, yeah, helping people work through all of these options is really important in our opinion, and that's why I guess we do, I guess, focus our positioning in the marketplace as being really niche to investors, rather than a buyer's agent which can service everyone. We really prefer to work with investors and help them get really clear on these goals and start to take off those distracting options from the table.
Matthew, how do you then find the stock to service the requirements? So, being in the position you're in, I presume there's a whole bunch of industry knowledge that you have, so that you're not necessarily relying on Domain or realestate.com. You'd you'd have your connections, of course. How do you go about finding the right properties for the right people? I imagine it's far more complicated than I think it probably is.
You might be surprised. Certainly, one of the first things we do once we've got a very clear brief, and that's what we talk about in those early sessions is getting really clear on the type of property, the maximum we want to spend, how liquid our deposit is, because the right property might pop up tomorrow. We want to be able to make an offer quickly. So once we've got a really clear brief, we can set some alerts up in software or directly in realestate.com and domain, which will make us aware when a property hits the market. But at the same time, by that stage, we'll have identified a few areas that might generate the type of property that we're looking for. And we will contact the agents who are active in those areas. And we'll make them aware that we've got a client who is in a position to make a strong offer really quickly, ready to move. We're not limited to just those that are vacant, or we're open to buying something that has an existing tenant in it, which opens a few doors, because some agents are working with vendors, or hopefully working with vendors, just waiting for that right opportunity. And it could be that they can pull a vendor onto the market, or at least get them from sitting on the fence to being open to sell, when they don't have to go through that whole rigmarole of, moving a tenant out or preparing the house for sale, doing the photos, staging the home and all that sort of stuff. So it's about making those agents aware. And also the property managers. Property managers are often a really good contact, because they're in probably more frequent contact with those landlords, and they might even, have an inkling as to that landlord's desire to sell. We reach out to all of our contacts, and we're always introducing ourselves to new people, mortgage brokers, financial planners, accountants. It's sometimes funny who might generate an off-market opportunity. And then, of course, once you start making these contacts, especially with the agents, we just start to receive off-market opportunities. And often an off-market opportunity could be a free market opportunity rather than a genuine off-market opportunity, which is, kind of different. It still can beat, a pre-market opportunity could beat something that's on the market in terms of the competition that you're fighting with to secure the property. So, my phone, I put it on airplane mode now, because I'm always getting text messages and phone calls, with these pre-market, inspections and opportunities to go and check them out. But I guess once you've been doing it for long enough, the opportunities sort of become a little bit easier to find. But I've got a dedicated email for giving to agents, because I'll just get spammed with all the new listings that they've got.
Great deal for you.
So I jump in there occasionally when I need to find something that might fit a client's brief. But more often than not, it starts once we get that clear brief and we start to make those inquiries and reach out to our contacts.
So I think you made a good point, Matthew, that people sometimes underestimate what's involved. And I'm pretty sure we've all met someone or heard a story from somebody that was like, I bought this property and all I did was, like you were saying before, right? All I did was put new floor coverings, chuck a coat of paint on it, clean up the gardens, and made $100,000, mate. And it's, it's at a barbecue or a family gathering or something. I think a lot of people get sucked into the quick win. I come from a background, in financial planning, where shares and managed funds, same conversations. Everybody had a story about, I bought these shares and, I've made $20,000 on them in 4 months. And so people go in with that expectation.
Yep. Crypto.
Case in point.
Yeah.
And so they go in with these unrealistic expectations. I'm interested to know how you manage that without people going, well, you're a wet rag. I'm going to find someone who believes in my dream.
Yeah. And look, I do sometimes pop people's bubbles, but I usually try and warn them. When we spend that time before we go looking at properties, we spend a lot of time really analysing their goals and making sure that they're realistic. And it's pretty easy to do with real estate, but I usually do warn people, that we may have to modify our expectations, but also I remind them that our goals can change as life goes on. We get older, we get job promotions, we come into more money through inheritance, or the opposite. Our partner or someone in the family may have an illness or pass away, and divorce, kids. All of these things can have an effect on the journey. And so, what we agree on, or the decision we come to with that first property, is just for that first property. It's appropriate, pointing them in the right direction for the time that they're in at the moment. When it comes to doing the second property, we go through the entire process again and just see what's changed, because often, all these little things change. And like I said, people come into money, equity happens in their own homes and or investment properties, job promotions or change of industry. All these things can add to the plus side, but then equally we can have things that kind of contribute to lowering their borrowing capacity or changing the direction of their goals. And sometimes selling their investment might be the right thing for them at that time. So, does that answer your question? I've forgotten what it was exactly now.
How do you burst people's bubbles?
Yeah, all data. It's really it's in the recent comparable sales. So, where can you buy something that's under $500,000 and gives you a $600 a week rent return? Well, let's pull up realestate.com and see where that's happening. Sorry, we can't find it. And so that, I guess I can show people data and really make things realistic. Once we get past that and we get into this realistic sort of space, then we can kind of create this hypothetical image of, or parameters for an investment property. And we can go, okay, well, this is realistic. If we have a purchase price of this and we can get a rent return of this, then we might have this much as a gap when you take into consideration all your ingoings and outgoings and whatnot, tax benefits and depreciation. We can go, right, this is achievable. So now where can we find that and have the capital growth that we want to, try and explore or achieve? So we can then really go, then we can start looking at locations. So until this point, we're still talking really hypothetical, high level analysis. And, but once we have that much clearer parameter and realize where our limitations are, then we can kind of go, okay, well, where will this work? And then we can really sharpen our focus on that area. Data pops the bubble for me.
Okay, speaking of data, given that you guys have the other side of the business with the property management as well, I'm only going to talk about Queensland because it's where I live and what I know. But I've seen a lot of nervous investors with a bunch of changes that have come into effect in Queensland with things like the rent is fixed now for 12. You can only change it once in a 12-month period, I think. And then there's some other new complications that are coming in. So it's a more nervous or apprehensive market than I've seen before. With the property management side of your business, are you advising, how do you even come up with a fixed rate for rent for 12 months when you don't know what your variable interest rate is going to do? And you don't want to rip the tenant off, or at least I wouldn't as an investor. I'm sure there are plenty that do. That seems like a really complex road to navigate with someone so that your relationship is ongoing and you have the opportunity for them to then come back and work with the service again. That seems like it could be a complicated part of what you do.
Yeah, it is. It really is complicated because when you, I guess, look after your tenants and keep the rent as low as you can manage, there comes a point where, things like 12 interest rate rises in a row really starts to bite. And there's nothing worse than seeing someone who sells a property because it's hurting too much to hold it. And, they look at the price of that property that they sold 5 years ago and what they would have had today if they just hung on to it. So, we navigate, I guess, what current market rents we could achieve for that property by looking at similar properties that have rented recently or are currently on the market, and balance that with, I guess, the relationship we've got with the tenant. We don't want to, I guess, lose a good tenant, because then we open up ourselves to the unknown in some ways, and we can do a lot of due diligence up front with, trying to find and screen applicants for a rental property. But we just, as of the 1st of July, had some rental reforms, the first time in 2 decades or longer since they came out, which has really changed the landscape quite a lot. So, we can't change the rent more than once every 12 months or once from the last increase. We're really limited now in what we can actually ask a tenant in their application, meaning we can be opening up ourselves to some uncertainties. Thankfully, the property management community in Adelaide is very strong and very tight, so we don't like to see each other get, a tenant that has perhaps not had the best experience with their previous landlord or property manager. And certainly tenants who apply and have only lived at home or in private rentals will get generally put on the B list before they get looked at, because we trust the word of our fellow property managers in the industry. But it is a delicate balancing act, but it's important to sort of try and keep as close to market rents as you can, because otherwise, if you have to play catch up, that increase might be seen as unfair. And if it's challenged and it goes to, say, the tribunal, then the tribunal may say, look, that's not a reasonable increase, and there's no real parameters. So this makes it really awkward. It'd be much easier if they just said increases can only go up in line with inflation, or by no more than 10%, whatever. But at the moment, it's all open to interpretation and being able to justify an increase. So when we have to break the news to our tenants, we usually explain that, this is due to, obviously increased costs, but also market rents. And so it's often harder to argue when what happens as a tenant, they'll get the rent increase, or the offer to renew with the rent increase, and they'll jump online and have a look and see what else is out there. And they might go, you know what, we're actually better staying put.
Yeah, it's certainly a challenging time. I don't think it matters which camp you're in as the investor or the tenant. I feel like there's some challenges to be navigated ahead with these rental reforms, all of which that can be, of course, assisted with having the right people in place to help you navigate some of those challenges. I certainly, right this moment, am pleased that I'm not navigating any of those challenges.
Yeah, and it's not surprising that following a rent increase, tenants' patience becomes a lot shorter for things like maintenance. And so, the expectation is much higher on getting maintenance seen to than it was pre-rent increase, which is completely understandable.
So that's where our tradies come in again, and it provides them with another fantastic opportunity.
Absolutely, as long as they get onto it quickly. Tenants don't have a lot of leverage, unfortunately, and the one thing that they do have is withholding rent, which is not, that's a breach of their lease to withhold rent while waiting for maintenance. But sometimes they feel that is the only way they're going to get listened to and action. So, it's been an interesting last few years, really, as labour shortages have meant it is harder to get, especially small jobs done, because everyone's busy, everyone's got work, and no one wants to sort of lose, a day's wages by going and doing a 1 hour job and having to drive across town to do it. So, those small jobs are getting a lot more painful.
That's right. Yes, when the government starts meddling in pricing for industry, I think this causes all sorts of problems that they are unable to manage, and they just leave it to you to figure it out, Matt.
Look, 100% was at the moment the government has put an incentive on the table, free stamp duty or waiving the stamp duty for new home buyers. It was previously capped at a certain value. I think they've lifted that cap now, which makes it, more attractive to more people. But it is linked to new homes, so they either have to build the home or buy a home that is newly built. but it's not really adding to the supply as much as it is adding to the demand. And so, yeah, the real problem is supply. So it seems every time the government at any level, state or federal, tries to do anything to help, they end up driving more demand, which only has one impact on house prices, which is
inflation and cost of living. And
Yeah.
Anyway, the three of us, I'm sure, could run the country much better.
Of course we
Yeah, a couple of beers, we'll sort it out. A couple of Pinots.
Yeah, that's right.
absolutely.
Some big fat South Australian Reds would fix it all. Matt, I have a question that I love to ask most of our guests, and I'm fascinated to hear your response to this one today. If you had 1,000 trade business owners in a room, what's one piece of advice you would love to leave them with?
When it comes to property investment, I'm assuming.
Anything you like, mate. It could be about, be kind to your mum or something.
Right. Oh, this is a good one. I think, when it comes to real estate, one of the pieces of advice that I often give people is, don't wait to buy real estate. Buy real estate and wait. And that's not really limited to tradies. That I think, I've seen a lot of people think they can time the market, and often, it's hard. They say there's cycles, but there's also there's cycles within cycles. There's everywhere is doing something different at any given time. So just get in there when you can and you're comfortable. But make sure you spend that 4 hours sharpening the axe. Is, I guess, my biggest piece of advice.
Both very good pieces of advice, Matt. Thank you.
Love it, Matt. Now, if somebody wants to go and check you out or perhaps have a chat to you about getting into the property market, Matt, what's the best place for them to do that?
Yeah, I'd love to hear from anyone who's heard us on the podcast. Best place to go is to the website, rosieandrosie.com.au. Head to the contact page. We've got a very cool Calendly link in there, which I only discovered probably about 12 months ago, but it's been a real game changer in terms of making time for people to catch up and have a chat, because it links straight into the back end of my calendar. They can pick a time that suits them and it's locked in. We're not playing tag, trying to lock in a time. And it's funny. I know it works because I go to bed and then I wake up in the morning and I've got new appointments in their calendar. So clearly people are on their phone at night. Thinking this is a good idea, and the fact that they're able to jump in and the time that suits them. That's really good. So find the contact page on the website and book in a time.
Love it.
Matthew?
Well, Matt, thanks for being on the podcast and sharing some tips and some funny stories, I guess, and a few warnings about real estate. I'm off to check out where the next hotspot is and throw some cash at it after all that.
But thank you guys for having me, and
Pleasure.
hopefully it was helpful.
Next time you're in Tassie, mate, look me up and we'll go and have a light red together.
I'll hold you to that. Likewise, if you're over in Adelaide anytime, let me know. Love to catch up.
Love a South Australian red, mate, so will do.